Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a magnifying glass to Adobe, ticker ADBE. Is this creative giant, a masterpiece of opportunity, priced like a rough sketch right now? Or is there maybe a picture with some hidden flaws we need to uncover? Big earnings report just hours away. The market's definitely on tenterhooks. Our mission today: give you a deep dive into Adobe using our research captured just this morning, September 11th, 2025, around 8:59 a.m. Eastern.
Yeah, and setting the scene for that deep dive, the broader market is trying to look a little optimistic this morning. Futures are ticking up, a splash of green. But, zoom out, and the economic backdrop is, well, it's murky. We've got economists openly whispering the R word, recession.
Yeah.
Growing concern there, especially after we saw those first U.S. job losses since, 2020. Plus, a critical inflation report drops today. So it adds another layer of a nervous waiting. It's a real wait-and-see moment.
That sounds like a tense environment. So, okay, against that backdrop, how does Adobe stack up fundamentally? Because we're seeing this really interesting conflict, right? Strong-looking valuation versus these pre-earnings jitters. The stock's already climbing pre-market. High expectations for today's Q3 report, it seems.
Exactly. And what's fascinating, especially thinking long-term, is this comes right after Adobe's big AI push. New AI agents. Think super smart digital helpers for customer experience. It's a big move beyond just creative tools. Now, our fair value analysis, digging into cash flow future earnings, suggests Adobe should be trading like somewhere between $835 and maybe over $1,100 a share. Compare that to where it is now, around $350.
Wow.
Yeah, it's not just undervalued, it's a massive disconnect. And most analysts, they agree, solid 65% buy or strong buy ratings. But, and this is new, a few little cracks have appeared, a couple of sell ratings just popped up, used to be none.
Okay, that is an interesting split. Strong consensus, but these new bearer voices emerging, what are they worried about? And for you listening, will today's earnings prove Adobe is that undervalued Titan R model suggest, or will it validate these newer concerns?
Well, if you look at market sentiment, the crowd is surprisingly, undecided. The options market, where people place bets on direction. It's an exact 1-to-1 ratio. Bearish puts to bullish calls. It's like a statistical shrug, a collective.
I'm sorry.
Everyone's waiting for that earnings card to drop before they really commit. You can see the lines drawn, though. Big psychological ceiling around $390, major support down near $300. But interestingly, the really aggressive bears, the short sellers, mostly sitting this one out. Short interest is super low, just 2.35% of the float.
Okay.
Which tells us not many are betting heavily on a crash here.
A portrait of indecision, like you said.
Yeah.
All right, let's see if the charts give us anything clearer. Can you simplify the technical story? No jargon, just what are the charts telling us?
Sure. Okay, the long-term trend. It's undeniably down, lower highs, lower lows. It's struggled. But recently, it's just been moving sideways, consolidating, stuck in a range.
Right.
Which often signals, a pause. Building energy maybe, volume gets tricky, contradictory signals. One measure shows money leaving steadily for months. Institutions may be selling off slowly. But another indicator suggests some quiet accumulation, smart money sneaking in perhaps.
A real tug-of-war then.
Exactly. And momentum, gone totally flat, idling near zero. No clear push either way right now. Volatility is interesting too. The price range itself is tightening, which usually means calmer waters. But the average daily price swings. They've actually been increasing.
Oh.
Yeah, like the market's bracing for impact from the earnings. Tension building. A coiled spring, maybe?
Okay, this is where it gets really interesting. So, we weigh all this. The nervous macro picture, those compelling fundamentals, neutral sentiment, conflicting charts. How do you even begin to stitch this story together for us? What's the overall verdict on Adobe?
Look, it's a complex picture, but our outlook is cautiously bullish. The main risks, they're pretty clear. A bad earnings report, obviously, the gloomy economic backdrop we talked about, and you can't ignore that powerful long-term downtrend. It's still there. But the reason for the bullish tilt, it really comes down to that massive potential upside. That huge disconnect between the current price and what we see as fair value is just, it's hard to ignore, especially now with this big AI story developing. Plus, you see that positive pre-market action building some hope.
So for someone watching Adobe today, maybe trading it, what's the key battleground? What levels matter now?
Right. For the bulls, you want to see a decisive break above $360. That could open the door towards $390. Right. For the bears, if it fails at $360 and then breaks below $348, that likely means a test of that big $300 support level is coming. So the clinical level that would make us question our cautious view, a close below $348, especially if it happens on heavy volume after earnings. That would signal the downtrend is back on.
Adobe, a company built on creativity. Today, it really needs to create a compelling story for investors. Will the earnings report paint that bullish masterpiece? Or will the picture turn out to be more of a bearish flop? We'll find out soon. Definitely has potential to surprise. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.